Hello, ladies and gentlemen. Welcome back to another episode. This video is going to be about multi-time frame analysis. You guys have been asking me this question for a long time, and today I have decided to create a premium video explaining and showing you guys how multi-time frame analysis works. So what you're going to be learning in this episode is how to basically take trades like this one here that I took this morning around 8:30 a.m. Eastern Time, New York session. So what we're going to be doing here is we're going to be going to the higher time frame, and we're going to be identifying the direction of the price from the weekly time frame this time. Okay, the second thing we're going to be doing is we're going to be identifying the higher time frame breakover structures, and then we're gonna basically mark our latest supply zone. In this case, we're looking for a supply zone, and you also learn a demand zone in the meantime. What you're also going to be learning is liquidity, imbalance, and how to refine supply zones, demand zones, and order blocks on the lower time frame. All right. You also learn how to take a trade, entry, exit, stop loss. All right. This is going to be a very important video. You don't want to miss out this opportunity. This video will probably cost you thousands of dollars if you go buy a premium course, but right now you can just watch it for free. Also, if you want to upgrade your knowledge to the next level, get the ebook. The link is going to be in the description down below. Well, subscribe to the channel in the meantime too. All right, so without wasting much of your time, let's go to the weekly time frame first. All right, once we go to the weekly time frame, what I'm going to be doing is I'm going to clean out the entire chart first. I'm going to clean out everything on the chart, okay? And then what I'm going to be doing is here we can see that if you zoom, you can see that the price is literally trending to the downside. Pound USD is basically going to the downside, creating lower highs, lower lows, okay? Creating lower highs, lower lows, trending to the downside. So this is a sign of a higher time frame bearish. So it's been going down for a long time since November 12th of 2007. This market has been trending to the downside on the higher time frame. All right, but everything else that we see here, like this is all a pullback that we've been trading against the trend on the lower time frame. So now that we identified on the higher time frame the price is trending to the downside, the second thing that I'm going to be showing you guys here is identify the last break of a structure before the move to the downside here. So this is our last break of a structure. This is the last low that was broken to the downside on the weekly time frame. So we are still sitting on the weekly time frame trying to gather some information about how how things are going with pound USD so that we can get the bigger picture instead of getting confused on the lower time frame. So now that we have the last break of a structure, now we're gonna go ahead and mark the supply zones before the break of this structure right here. Remember, supply zone are found between the lower high to the lower low on a downtrend, and then on an uptrend from the higher low to the higher high. So in this case, since the market is trending to the downside, supply zone can be found between the lower high to the lower low, especially before the break of this structure here. What causes the break of a structure is supply or demand. All right, supply and demand is not going to be right here. Supply and demand, especially supply in this case, could be somewhere between here and here before the break of this structure. So this is very important. All right, no one is going to give you this premium information, so make sure you write it down. You look for supply zone between the lower high to this area here before the break of this previous low here. All right, so now that we identified the break of a structure, what we're going to be doing is now we're going to be going ahead and marking our supply zone, and that supply zone has to have it has to have what do you call an imbalance. Okay, so here we have an imbalance right there. We have an imbalance between the low of this candle. Let me move this real quick. So the low of this candle, okay, we have an imbalance between the low of this candle and the high of this candle is here. So this entire area is called imbalance. Okay, so now that we identified our imbalance on the weekly time frame, we're still sitting on the weekly time frame. Now I'm gonna go ahead and mark this supply zone here. Okay, why is this supply zone? First of all, it has a imbalance. Second of all, the market is swept. All this liquidity and inducements are sitting over here. First of all, this was an inducement. This is and also an engineered liquidities. So this is all cleared out. So now the market started reversing right after, and we can see that we already see a bearish candle formed around the supply zone on the weekly time frame here. So now what I'm going to be doing is I'm going to cut the price. Okay, and the reason why I'm cutting the price is because I want to refine this supply zone on the daily 4-hour until I find entry on the lower time frame. So now I'm gonna go ahead and cut this price. All right, so now we're gonna cut the price right there. Our main focus is to refine this supply zone on the lower time frame. So if you go to the daily time frame, there is nothing much going on. We can see first of all a break of a structure on the daily time frame, which is very important. So we see this break of a structure on the weekly time, on the daily time frame. We also mark that as well. So now we're gonna go to the 4-hour time frame. And what is our goal on the 4-hour time frame? To refine this big supply zone. Because if you take a trade and you put your stop loss, you take a trade right here and you put your stop loss over here, this stop loss is gonna be as wide as you can ever imagine. It's gonna be about 210 pips. So you don't want to do that. That is too much. So this is when it comes to refining your supply zone. So here we can see that we have our supply zone right there. And why I say that is because first of all, we have a liquidity taken out here. We have a liquidity taken out over here, and then the market is reversed right after that. And we also have a break of a structure, and then we also have an imbalance sitting the low of this candle and the highs of these candles here. So this is where a liquidity, this is what an imbalance is. And we also have a liquidity that's sitting right here. So this is what you call a liquidity before a reversal. Remember, if you have liquidity sitting here and you have a supply zone or a demand zone, more likely price will take out this liquidity, which is so obvious. Most of the traders will basically enter a trade over here thinking this is the reversal zone. But if you are a bro trader, you always wait for this liquidity to be taken out, and then you execute your trade on the supply zone here that's already refined on the 4-hour time frame. So remember, we started from the weekly and now we are on the 4-hour time frame, still refining our supply zone. So now I'm gonna continue going to the 1-hour time frame. Why am I going to the 1-hour time frame? I still wanted to see if I can literally refine this, you know, real quick, because we can see a shadow here. So between this this area here and then this high here. So basically price opened over here, push to the downside. Okay, price opened over here. This is the high of the price, open of the price, and then push to the downside. So this shadow here is what I call a push to the downside. Okay, this is a supply that's pushing price to the downside. So this is an indication of still a supply zone, and this area needs to be mitigated, or this area needs to be filled, because there is an imbalance going on all this area, even this area here. So now that we identify that, I'm gonna go ahead and play this and go back to the price the way it was. Okay, adjust it again. So once I adjust the price, you can literally see that the current price reversed from the supply zone that we refined on the lower time frame. We started from the weekly time frame, and then we refined it all the way down to the 4-hour to the 1-hour time frame. So here you can see how it looks like. So when I tell you a shadow could be a supply or demand, this is what I mean. I've seen a lot of people who don't know nothing about trading, and they've been, you know, basically commenting on my videos about how do you mark a wick, the shadow, and call it a supply or demand zone, because they don't know what they're doing. They basically are brand new traders, but they're gonna get to that, you know, stage of knowing supply and demand very perfectly. So this is, you know, it can be supply and demand. So the shadow also is a price, and it can also create a supply and demand, because this is a pressure to the downside. Remember, it didn't just happen. So that is also a sign of, you know, price going to the downside. So once the price hit this supply zone on the higher time frame, automatically on the 1 hour time frame, we can see that we have price creating higher high, higher low, and then we have price creating higher high, higher low. And why do I call this higher high, higher low? It's because price retraced the low of this candle. If you want to learn about pullbacks, go watch my pullback video in my channel. You will learn a lot by pullbacks, okay? All right, so now I'm gonna go ahead and mark my change of character right here. I'm gonna go ahead and mark my change of character right there. All right, so once I marked my change of character, my change of character on the daily, on the 1 hour time frame, now what I'm gonna be looking for is an entry. Okay, how am I looking for entry? So now this is where I use the session, Asia session kill zone. Okay, so I'm gonna go ahead and use this indicator called kill zones by again, let me show you guys whose indicator is this. Okay, let me show you guys whose indicator is this. All right, so this indicator is by RJ Trader. Okay, RJ Trader. Let me try it again. Asia kill zone. I don't really need it, but to be honest with you, it saves me a lot of time, so I really need it somehow. So this indicator is created by RJG Trader. You can get it from the indicator section on TradingView. Okay, all right, so now that we turned on the Asia session indicator, what we're looking for is a sweep of liquidity on the Asia session high. So this is what happened this morning. This just formed right now today after the open of Sydney Open. So here is the Asia high from yesterday and the Asia low from yesterday. So now that we have Asia high and Asia low, this is what they call a buy side liquidity and a sell side liquidity. Why do we need liquidity before we enter a trade? Liquidity basically means the big traders or the big bowlers, they need enough liquidity or enough money in order to fill their orders. They cannot just run the market. They cannot just fill their orders. They need that liquidity taken out. Okay, so after the Asia session high was taken out, let me cut the price real quick over here and continue showing guys how I took this trade this morning around 8:30 a.m. Eastern time. Okay, 8:30 a.m. Eastern time. And I also set my chart to Eastern time, New York. You can also do that by going over here and changing your time zone to New York. Okay, you better do that because I usually trade New York session and I trade with the New York time. Okay, all right. So now this trade, the trade that I showed you earlier, I executed this morning around 8:30 a.m. Okay, so now that I cut the price on the 1 hour time frame, what I'm going to be doing is I can see that Asia high has been already taken out, and we also have a change of character after price reached the higher time frame supply zone. All right, I also posted this opinion on the Telegram channel. I told you guys a few days ago that GBP/USD is basically resting on a supply zone, so watch out for that. All right, so anyways, now what I did was I went all the way down to the lower time frame. Okay, now what I did was I went all the way down to the lower time frame, and what I was looking for in the lower time frame is I was looking for a way to enter the trade. Here on the 15-minute time frame, you can see that price already cleared Asia high liquidity, and it went back to since we have the change of character after the price hit the higher time frame supply zone, it left some type of lower time frame supply zone right here, which is the shadow high right there. Okay, which is the shadow high right there, and this was where I executed a trade on the 5-minute time frame. All right, let me continue going down. Remember, we started from the weekly time frame and now we are on the 5-minute time frame. And the reason why I took the trade on the 5-minute time frame at the shadow, I'll tell you why. Okay, when you look at the shadow on the 15-minute time frame, what did it look like? It looked like a shadow. But now that you are at the 5-minute on the 5-minute time frame, you can see a complete supply zone that is so clean with an imbalance that also liquidated. If you look at the high of this candle, it took out all this liquidity sitting here. So this was my clean supply zone on the 5-minute time frame. Okay, after I mark that, and I already refined on the 5-minute time frame. Even the lower time frame supply zone, you refine it on the lower time frame. Even you even go from 15-minute to the 5-minute until you find that nice precise entry. Remember, the 5-minute was given as this shadow, but when you go to the 5-minute time frame, you have a beautiful, very clear supply zone that took out liquidity, and that also has imbalance and very clean with momentum and breaking. It also broke structures to the downside too. So this was a clean area without any hesitation. I entered the trade. Okay. I entered the trade. Okay. So here was the short trade right there. I put my stop loss right above over here, you know, risking not even more than about 10 pips what I did, you know, a little bit above, you know, the supply zone. And then I targeted the 1 hour lows. Okay. I targeted the 1 hour lows, which was all the way down here. It was right there. All the way down there. So now let me go to the 5-minute time frame and see how this played out. All right. Very easy, very simple. You just have to, you know, build a story when you are trying to understand what's going on the higher time frame, and then trying to find entry on the lower time frame. So here you can see, without any hesitation, without any issue, the trade is just played out very nice, very smooth, no problems asked. All amazing, amazing, amazing. And this trade gave me around 79 pips. Okay, 79 pips. This is more than I can ever ask for. Okay, so you can execute trades like this if you trade around if you basically trade mechanically and you use the SMC strategy. Now that you can see the smart money trading strategy works, you need to practice, practice, practice. Don't ever give up. Practice, practice, practice. Also, if you want to upgrade your knowledge, get the ebook. That ebook has all the knowledge that you need about smart money trading, and the link is in the description. All right. I've been in the market for a long time. I bought that ebook, everything that you can ever imagine, probably a knowledge that will cost you more than $2,000. All right. You can find it in the ebook and you can have it in your possession. You can download it right away. Okay. Without wasting time. I really appreciate you guys. Thank you very much. Please share this video. Please support the channel by liking and subscribing, and also leaving your comments in the comment section so that I know what you guys are interested in, you know, me making the next video coming up. So I want to know what you guys are interested about, what I should make next. Thank you very much again. Your brother Jamal. Peace and love.